Good afternoon, everybody. How we all doing? Huh. I think my YouTube is a blank screen. What's going on? I never know how to work any of this technology. Whoa. Figured this out last time, but I can't figure it out this time. Monitor. What is going on with this YouTube? Why can't I change the screen? I'm so bad at technology. Um, just give me a minute, or otherwise I'm just gonna give up. I don't fucking understand this. And I'm so grumpy that I don't want to deal with this. Yeah, that's what it's supposed to be. Oh, did I fix it? So there's a minute delay in YouTube. Yeah. There it goes. All right. I'm a tech genius. I fixed it. Plug it in first. Oh man, it's hot in here. Weather got beautiful. We had that awful weather for like a week here in New York, and it's gorgeous out now. This market, on the other hand, is anything but gorgeous. Anyway, good afternoon, everybody. It's good. It's good to see you all. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I got out of XLU today. Everything else should be the same. Yeah. And the office air conditioning was working last week when it was actually cold out, and then it was cold in there. I don't know. Offices. Who needs them? Not me, that's for sure. Definitely not me. Not me ever. All right. What did the market do today? It got smoked. Spies down 0.13%. And it looks like we ticked up 20 cents here since the market closed. Q's down 1.25%. Also, I think upticked a little bit since the close. And IWM down 1.7% or so. It was a bloodbath. That JOLTS number destroyed this market. And I knew it. I knew it. I didn't execute anything short. I called out this short versus the 10-10 high for the indices that I hope somebody was able to capture. I mean, we knew that JOLTS number was going to be important. I'm sure no one has short enough memory to remember that this was a JOLTS day on August 29th, right? The market had finished its August sell-off, gave a beautiful bounce to equilibrium. This high came in on August 24th with this negative Maribozu. We were concerned that this was going to be the lower high for the market as we retested 445 resistance and failed. Market made a beautiful higher low. This is one of those higher lows that I struggle to catch day after a negative Maribozu that creates a higher low with no extension. Similar to what we were talking about in yesterday's afternoon meeting, where if something going on with Palantir right now, Palantir, something's going on. Sorry. I have a position I gotta manage a little bit. Closing in on controversial UK health data contract. Okay, well, the market seems to like it. Sorry, just give me a second here. All right, my P&L got a little bit better. A little bit better. Um, so we were just talking about that August Jolts day. Um, yeah, so just doing a quick recap of what was going on there, right? We had that August low, we had this potential pivot high, we had that higher low, which I was just likening to what we had discussed yesterday about if yesterday were to be a higher low, those are the types of higher lows that I struggle to be able to capture. Similar kind of I think on this day back here on August 25th. But the idea is that you still want to, even if this day is hard to capture, you still want to make sure that you have stock from the absolute low by having rules in place that can enable you to maximize your reward on really good execution like we had there in August. And then we were really eyeballing this 445 as major resistance. It was the level that we broke down from in August. We held it as resistance high on the gap up on August 24th. It was a big negative day there. And that was the question. If we could really get back above that 445 high, the market would start looking a lot better. And we were able to do it on the 29th. And what enabled us to do it from a news perspective was a JOLTS number. The JOLTS number came in light versus expectations, and the market absolutely roared on it. I don't ever remember JOLTS being market moving in the way that it was on that day and kind of in the way that it was today. But that's one of the cool things about trading and about markets and economics is that there's a constant evolution happening, and numbers that may not have mattered for long periods of time, all of a sudden the market loves them and they matter, and then numbers that mattered previously, all of a sudden they fall out of favor and they don't matter anymore. So we're in an environment now where the JOLTS number matters because one of the big things that the Fed is looking at is the strength of the labor market, and they're looking at the supply and demand imbalance in that labor market of there not being enough people basically for the amount of jobs that are out there. And while there has been some improvement on that, I'm not sure if you guys have noticed in the areas that you live, but there's certainly certain types of roles or jobs or whatever that it seems like it's not unusual. I think for a lot of hospitality jobs, what I've seen, where they just don't have the same amount of employees that they had previously, or even trying to get service at restaurants. It's not so bad in New York that I've noticed, but I know when I'm in Idaho, it's certainly a problem out there. So the JOLTS number is extremely important. It was moving in a big way of the market back here in August. And today that number came in really poorly. So initially we were set for a gap down for 2 days in a row. We had very heavy pre-market selling into the market open. And yesterday the market was able to recover with a really nice bounce off the open. It did not continue the downtrend and held in really well. That was on the backs primarily of big cap tech, your average stock that was out there. The IWM actually did continue the pre-market downtrend throughout the day. And then today, we're having a heavy pre-market sell-off again. When I first woke up, the market was small green, but by the time we opened down at 425. So there was a solid, $3 sell-off pre-market over the course of an hour or two. And, the question was, are we going to get a snapback similar to yesterday's pre-market selling, or are we going to get continuation of the downtrend? And off the open, it wasn't too bad. We had a pretty good bounce. I remember the IWM struggling to get above 173.50 that I was saying was an important area, and it never was able to do it. but the SPYs were ticking above 426, which I felt was important. The Qs were ticking above 360, which I felt was important. It seemed like a lot of stocks out there were holding in okay. There were certainly pockets of weakness, but not a terrible opening recovery. And if that IWM could just clear above 173.50, which it was more or less testing when the JOLTS number came out at 10 o'clock, we would potentially be looking pretty good. And then again, if you circle back to your big picture, this potential higher low for the SPYs might be holding, and maybe this IWM is able to give some sort of day 3 RDR. What I mentioned about the day 3 RDR today in the morning meeting was to be a little bit careful of it because I didn't think there was enough extension. Tomorrow, I'd love the RDR because tomorrow, if we're trading below today's low, will be really extended and it'll be a day 4. That's a much better trade as far as I'm concerned. Um, and then the JOLTS number came out, and it came out really hot. I don't exactly remember what the number was, 9 million or something like that, versus I don't remember what expectations were off the top of my head, but very clearly, very obviously hot. And all you have to do is have a memory that extends back to August 29th, and you understand that this is a really important number. We've spoken about it a lot here in our meetings. We know that it's a really important number for the markets and for what the Fed is going to do. Um, Thanks here, Dave S. just posted it. U.S. JOLTS job openings came in at 9.610 million, and the estimate was 8.830 million. So came in hot by like 1.3 million or so. So yeah, so just not the number that you want. And the market immediately got smoked off of it. Immediately. You can if you are flexible enough to understand the importance of that number being hot like that and what it means to the market, you probably could have shorted right away. We got the number posted pretty early within that 10 a.m. bar versus the news bar high. Um, I wasn't ready to react like that, which is my own fault. I probably should have been. Um, I don't know. For some reason, I had a hunch that we were going to break higher, which that was just a hunch, and hunches are what they are. It was obviously wrong, and the market got smoked. We got smoked. So you had an opportunity to really whack this market at 10 a.m. when that number hit, if you recognize the importance of it just versus the high. If you missed it in that first 5 minutes, it became very hard to chase 424.30, even if you understand that that could be a really market moving number. Now all of a sudden you're talking about risking $2 in the SPYs versus the news bar high. So you kind of needed to wait for a new setup to come in. The new setup came in with the 10-10 candle. I mean, by that point, I think it was just very obvious that this was bad. We had a quick snap higher on this third bar. It's not a fake tail. That brought us pretty much up to the ADMA on the 5 minute for all these indices, the IWM being the smallest move there. And that's your continuation shooting star after a bad news number in a market that's looking bearish and is now below yesterday's low for continuation. That was probably the best trade I called out all day. I wasn't involved in it, but it was the best trade I probably called out all day. Um, that JOLTS number just got me, pretty mentally like ready for us to totally fall apart. Just because it seemed like it was really important. Up until that time, you had the TLT trying to rally off the open. TLT was given this good bounce back here into the ADMA, digesting that. It looked like this could have broken higher with the market. It seemed like we were setting up to try to move up with both TLT and with the market, and that jobs number just wrecked it. You can see a TLT right down to new lows. That led to continuation of a trend throughout the rest of the day. The dollar immediately ripping higher, and then somehow within 7 minutes we had chatter of the yen intervention hitting that actually helped bring this dollar down a little bit, which I think was somewhat beneficial. And I think that's actually what helped kind of create some of this tail. I think that happened simultaneously. Um, but without a doubt, the JOLTS number was no good. And then as we sat here, we created this bear flag, and this bear flag was also shortable. A lot of times at this time of the day at 10:30, I want 15-minute price time correction for continuation. I don't like 5-minute patterns that are triggering after 10:30 too often. But when you're trading off of a news event like this bear flag, which we communicated also something you could have shorted. You could have shorted for continuation through that low versus those pivot highs, and that those highs held all day, even in this bounce. Eventually, we started to approach SPY 420. I didn't do anything with these first lows. I thought it was too early. We weren't close enough to 420, and 420 is just the upper portion of the daily chart support range that I think actually extends down to like 417. This is a really big, really important support range. It's also in conjunction with the 200 day, which is at 419.17. Funny, we were just talking about how wide that spread was between the market and the 200 day, and now there virtually is no spread between the market and the 200 day. But I didn't really capture any of the longs here. I think I called this low out as a hammer that you could potentially look to buy, and I was looking at um, time of day a little bit because we've seen some supportive flow come in midday pretty consistently. And is ARK moving on that too? Not really. It's really Palantir. Um, so nice little bounce there, and then we began to break down. I called out the long here at 215, and this time I put my money where my mouth was, but I bought T triple Q, which I guess was stupid. I'm buying Qs off of a SPY trade. I mean, the reason I think the Qs are going to be relatively strong into a bounce is why I went after it, which was also wrong. Because the Qs eventually broke new lows, SPYs never broke new lows, and the IWM never broke new lows. So I ended up buying T triple Q off of this pivot that I called out at 215 because and the trade was simple. It was just meant to be a day trade. I did not take a lot of size in it, but we're at 420 and we're starting to get extended. I wouldn't even say that we're, someone said in the VTF today, like it feels like we're getting extreme. We're not actually from an extension perspective, the way that I view it. ADMA is at 428 quarter. The low of the day today is 420 quarter. So at lows, we were $8 extended. Really want that 910 plus extension from the ADMA to start feeling confident. Though it is notable that the spread between the 8 and 21 EMA is really widening up again. Um, so that wasn't so much of a big extension trade there. That was notable, $8 extension. You're starting to get to that point. It was really more of just a support trade with this little hammer coming in, not on big volume. But I bought the wrong index. I bought the T triple Q. I booked some into this move. My best sale was 49 cents. Highest 51.52, so it was okay. And then I got stopped down into the pullback, and I kind of gave my profit back in it, and I closed out the position flat, P&L wise. And yeah, I mean that's pretty much it from a market perspective. We got wrecked today. The question is, how do we open tomorrow? We had a good little bounce into the close. I'll be curious to see where short-term tactical is tomorrow morning. If they have that in that green zone after the bounce or not. I'm assuming that they will. But we'll also assess the gap. It's hitting the point here, especially if you look at the IWM or you look at the RSP, where a day four um, gap down or a day four RDR would be nice. You look at the Qs and they're still so much stronger. Though this inside down here for the Qs, if it leads to new lows, would finally confirm a lower high here for the Qs. The Qs are still holding in like an absolute champion. Obviously, we saw that Goldman note yesterday about them saying that based on HEG ratios, uh, not a metric I look at a tremendous amount, that big cap tech is cheap compared to the rest of the market. I don't buy it. I don't buy it. I'm more in the Supermanian camp right now. But while I don't buy that big cap tech is cheap, it doesn't mean that I'm willing to come in and short it either. Because we talked about this a lot over the course of the last couple of days that these companies, and we use Microsoft as an example, they're benefiting from increase in interest rates. It's maybe more like these biotechs, which actually held in a little bit better today, that still need to raise a lot of new capital in these higher interest rate environments that are probably really really struggling. So we're continuing to create the haves and have-nots at this point, and I am now very very much of the opinion that the Fed needs to stop raising rates, and they need to stop chattering about raising rates. It's not working, and at this point, you're just going to break something. I got no problem with them keeping rates up, but stop raising rates. Stop raising rates. It's just getting crazy. I mean, look at what the TLT is doing here. Um, yeah, TLT continued to get smashed. Day three to the downside, getting really extended. Big volume here. I still think I'm not here to call bottoms, but um, I think that this TLT is nearing some stage of support. I think that we're going to see some support come into this, whether that's the short squeeze that came from the Jim Cramer note that Josh posted earlier, or it's just stabilization where we start to chop around and trade more like the TLT typically does, which means not trading in straight lines. Um, that's why I'm looking at like this TLT here almost as like an investment at this point, not even so much as a trade, which is why I have a position, but I haven't really been trading it. I've just a little bit of position management, staying very light, just kind of holding it, watching it. I know Josh has been trying to be more aggressive with it, which obviously I thought that trade was looking great off the open, and then the Jolts number just ruined the TLT bounce that was trying to happen off the open, which was also being supportive of the market. And that's pretty much it. I'm really trying to be less is more, which is difficult for me. I think as you guys know, if you know my personality, because I'm going on vacation after this week, and I need it. I definitely need to take a step back and de-stress. It's been a wild year here. Um, yeah, what else? So I took that T triple Q trade, kind of break even. I did battle with this XLU, which I don't want to be doing battle with things. And it was my best name. I made money in it. I finished positive in it between yesterday and today's trading session. And I just kind of closed out of it because I'm trying to de-risk a little bit I'm trying to de-risk a little bit into my trip, but I'm also recognizing kind of where this market is trading. And it's, hard at a certain point here not to start to look very big picture at building into some things that are finally starting to get cheap again. I think both technically and fundamentally, if we can kind of get some signals to come in right as the market's done a nice little correction here. I don't know. I don't know if anybody knows off the top of their head what we're down on a percentage basis from closing highs through to today's closing low. I'm guessing 8%, something like that. Um, but I think we're starting to get into that point here where I remember back at the end of July, I was looking for like a 5% pullback, and now that's obviously escalated to something more. And we had that great bounce in August, and we got bearish again in the middle of September in conjunction with OPEX and in conjunction with the Fed. But now that we have sold from that 457 high down to retest 420 SPX 4200, and now that we've gotten through September and we're almost working our way through this first week of October, and we've sold from 445 down to 420, and I think the TLT is starting to get a little bit extreme. I wish positioning sentiment's starting to get there. I wish positioning was a little bit more favorable. Positioning still, broad market positioning between the hedge funds and um, the vol control world and the CTAs. That positioning's still not like fully where I want it to be super excited on like big picture like bottom longs like we kind of were at the end of last year and the beginning of this year. But it's washing out a little bit more every day as we approach what is really big support, which maybe they overshoot this 420. I think I remember 417 being a 10% correction from the market, which puts you officially in correction territory from year highs. And so that's just an extra piece in there. I really like paying attention to percentage pullbacks and understanding where they fit in historically. A 5% pullback in the market versus a 10% pullback in the market, which is officially a market correction, versus a 20% pullback in the market, which is officially a bear market, and then what the different types of bear markets look like historically. Because I think that if you nail those right, like we did at the end of last year, the beginning of this year, that's where you can make tremendous amounts of P&L over the course of, multiple weeks or multiple months. And that's where I find that I make a lot of money for myself. Like I'm still hanging my hat on as we're in October here and we have a couple months left of the year. I'm still hanging my hat on having made my year in that first portion of the year, and catching that $4,200 breakout and us being all over that so correctly, where even as the market has been more difficult here in August and September, but we've been um, pretty spot on with our big picture calls. I think the trading environment's been hard in September. Um, I want to wait and see. I want to see us getting back now into that territory where the risk reward on the big picture starts looking a little bit more like it did at the beginning of this year. And I think we're starting to get close. Which we don't have to hit that perfect setup for me and for the market to go higher by any means. But we're certainly getting to the area here where we're at 420. Dimitri letting me know that spies are down 8.2% from highs. I guess 8%. So that was a pretty good guess on my end. Um, I'm if we could just get positioning to be a little bit more favorable also as these technicals approach this 417 to 420 area, which I think 417 is in conjunction with a 10% pullback from market, which makes it official market correction. 419.17 here is the 200 day. 420 is where the market broke out from. I mean, we're starting to get to the point here where it's like, man, on the one hand, I'm trying to de-risk a little bit into this trip. On the other hand, I should have went on vacation a month ago. back when I was much lighter and I didn't love the opportunity in the market. But you can't control these things, right? It's just kind of how it works out. So I'll probably end up with more exposure than I want going into this trip. What else is new? And I'll be carrying a laptop around Africa and seeing if the elephants can be better traders than me if they want to come use their nose and press some buttons. Anyway, um, that's pretty much all I've got. I gotta go to Men's Warehouse after the close today to get fitted for. I'm gonna be in a wedding party for someone, so I gotta get that done. But I got some time here. If anybody wants to ask any questions, I'm here for it. From any Vic, question: if the SPY goes below the 200 day, could we say conclusively that we break the long term bull trend? No. And support becomes resistance. Well, support always becomes resistance no matter what. Support becomes resistance on multiple time frames. So there are already areas of previous support, which I would argue are resistance, like SPY 435 and probably SPY 430. Those are previous support levels and previous important levels that now could hold as resistance on bounces. For me, when I'm looking at big picture trend, and one of the best ways to view daily chart trend is to use simple moving averages, particularly a 20, a 50, and a 200 SMA. I know in this chart I only have the 200, but if you want to pull up charts on your own that have a 20, 50, and 200 SMA, it's the slope of the moving average that's important. The 20-day represents approximately a month. So if it's sloping up, the essence of trend for that month is higher. If it's sloping down, the essence of trend is lower. If it's flat, then it's trendless. The 50 represents what I call more like the intermediate time frame. It represents about like a quarter or so. Um, that is the same deal. Is it sloping up, down, or going sideways? And that tells you the essence of trend. And then the 200-day representing roughly a year of price action. I think there's like 220 days in an average year, trading days. Um, the maybe it's a little bit less than that. Maybe it's 200. The 200 day again, it's a slope. So the 200 day is still the slope's still up. So if the market gets below the 200 day and closes below the 200 day, the big picture trend is still up. That only begins to reverse. First, this thing has to get flat, which means that we have no trend, and then we have to hold below it long enough for it to roll down, which then it's a process. Like it's a process to get the 200-day slope to change. Look at the process of the 200-day slope changing from our big uptrend that we had into the 2022 bear market into this sort of maybe 2023 bull market, right? Um, you had this uptrend that was, going on for a long time. There was a constant spread here. The 200-day was a distant memory. And then we had this big sell off. We got below the 200-day, but the bulls were still technically in charge. It was rising. We managed to stay below it long enough that this thing began to flatten out. We began to stay below it long enough that this thing began to roll over. Now your big picture trends, your big picture bounces are guilty. They're guilty. And it takes a lot of work to reverse that, which we were able to do at the beginning of this year. We got above that 200 day. We pulled back below it in that March sell off, February into March sell off. Spent a brief time below it. That was when this 200 day was flat, though. So now you had like a trend less market on the really big picture. And then finally we held above it and eventually broke up where this thing was able to finally reverse course and begin to point higher. So that's how I utilize those moving averages to understand essence of trend on large time frames. Thanks for the question, Eddie. What else do we have out there? All right, YouTube. What's going on to my people in YouTube? Give me the thumbs up if you're watching it. From Cyril. What do you think about the IWM price action? We came very close to 170 support. Yeah, the IWM is disgusting. I mean, it's really gross. And this is what the Fed should look at, right? If they think that the market's holding up, they should look at the IWM. The IWM is right on the year as of today's trading session. It's right on the year, and we tested the closing low of the year for the IWM. The closing low, not the absolute low, the closing low is 170.25. And we got to as low as 170.37. Um, Again, representing more of your average stock that's out there. So you take out your Apple, and this is what your market looks like, right? Or you can look at the RSP as well, which also has been getting decimated. Is the RSP red for the year? I would like to know. Um, 141.25. Yes, RSP. So the average stock that's out there, and I'd be curious to know if anybody has statistics that can tell you, like kind of like our breadth statistics that we see, except like breadth for the year, like advancers, decliners over the course of this calendar year. Um, I would expect it to be negative at this point, with the RSP being negative and IWM being negative. I'd be curious to know just how negative it is out there. It is out there. So the average stock that's out there is negative, probably, at this point of the year, and you can see that with the IWM and the RSP. I mean, the stuff is really getting gross. It's about how oversold the market is, though, or if it's oversold. So IWM ADMA is at 175.60. We're at 171 right now, so $4.50 of extension. It's not extreme. If we could get a big gap down tomorrow or an intraday sell-off where we're getting into the upper 160s on the IWM, and that SPY is getting, honestly, I'd love SPY to just gap down to 418. I don't think I'll get it, but I think that those would be huge buying opportunities. I mean, huge buying opportunities. By huge buying opportunities, I mean similar to what we had back here on the 27th. So maybe a little bit better because of the broad support on the market. The 27th, during the day that day, when we were in your lows, we recognized the extension of the market and got more aggressive to the long side. All you can expect off that is a snapback to equilibrium. That's exactly what we got that afternoon, the next day, the next morning. So it's like a 2-day move overall. And there's your price correction. We're touching the ADMA. And then the question that we were asking at that point is, are we getting a higher low here? And now in hindsight, the answer to that is obviously yes. House votes to remove McCarthy as speaker. Wow. Are we moving on that at all? Wow. House votes to move McCarthy as speaker. I'm not going to say anything because I don't have anything to say in regards to that in markets that I think isn't borderline on being too political. And I try to only venture into politics as far as I need to for markets. So I'm just not going to say anything about it, but it's pretty wild. Um, pretty wild. Anyway, yeah. So that's my thought process. So thank you for the question there, Cyril. Um, from Mike, what's up, Mike? How are you? Yeah, Michael B letting me know that there were 8% down in the spies. Mike also letting me know spies and Qs are down a little over 8% on the year from highs, and the IWM is down 14 plus. And it's negative year to date. Yep, that's what we're looking at. Spies are still up about 10% year to date. Qs are up 33% year to date. It's wild. Qs up 33% year to date, and the IWM is negative. Um, Jack Leachman, how long am I anyway? I'm pretty long. Yeah, Jack, just reach out to me through LinkedIn. Happy to set up a conversation. Yeah, so I've been I guess sounds like you're just starting to follow along. I was very long early on in the year. I got net short pretty much at the highs. I did pretty well with the short side, though I tend to be a person that focuses on the long side. I did pretty well with the short side there into this pullback in August. And while I called this pullback like perfectly in the second half of September here, I did not capture it on the short side at all, and I'm hitting a point here where I'm just starting to rebuild into the longs that I had sold on the way up, and I'm starting to do it more aggressively. So I'm starting to get pretty decently heavy to the long side again. And that'll be a little bit bigger picture, just portfolio management. Uh, for Michael B, as you always taught, assume trend will continue until it doesn't. Looking for higher lows, higher highs in the daily. My bias is short. Well, I'm accidentally giving you love and thumbs and like 100% and smiley faces, but that weird thing is blocking me reading a comment. My bias is short for now. Breath has been declining. Yeah. I think so. First of all, your comment on the trend being your friend is just an absolute truism of markets, and we spoke about that a little bit in yesterday's afternoon meeting about how this business is really a lot easier if instead of trying to bottom pick like XLU, which I did yesterday through today with some minor success, but not worth the headaches that I encountered in order to be able to do it. Um, you're better off just being with the trend and then recognizing when that trend becomes so extended and so extreme that you can come in and either book profit or potentially come in and be sneaky on the other side of the market. It's not an easy trade to come in on the other side of the market, but we also have to recognize is competing trends, and I would still argue that we have competing trends. Small time frame is definitely a bear trend. Intermediate time frame has really flipped to bearish as well. It was neutral for few months here, and then finally, I think that intermediate trend is broken down to a bearish tone. But the big picture trend, we still do have a rising 200 day. So the big picture, I think, still is on the side of the bulls. And when you start getting extended into bigger support levels, the question that you have to ask yourself is which trend is going to hold. We're extended. If we become extended to the downside into major support, and we're getting there. Um, that's an opportunity for the big picture bull trend, which I would argue is still intact, to come in and create a pivot at a previously important level and cause small time frame reversals. With that said, even though it's lower probability, every big picture reversal starts with the small picture reversal, right? Like you'll never get the big picture to reverse to a downtrend if the small picture wasn't in a downtrend to begin with to actually bring it down. So when I'm looking at this market here, and there's a lot of moving factors. Small picture, intermediate picture, we're definitely trending down. I don't like the IWM weakness. I don't like the breadth numbers. The TLT is certainly not been supportive. The dollar's been ripping. The flip side of that you could try to make, and it's argument that I'm trying to make from the big picture, is that this TLT can find some support soon. This dollar maybe this dollar doesn't like just using the UUP pull back to August levels, but maybe it stabilizes and stops this insane uptrend that it's been in. And if you can get some stabilization in the dollar, and again, stabilization in the TLT is really more what I'm calling for than a reversal. If you can get stabilization, maybe that's enough to enable this big picture support and big picture trend in the market to reverse the small picture. But obviously, if Bill Ackman is right and Ray Dalio is right and Jamie Dimon is right and we're going at 7% interest rates, then there's a real chance that this market doesn't stop and this small time frame sell off here eventually reverses the big picture as well. So we're finally getting into like an extremely pivotal spot where I would expect bulls to make at least some sort of stand. But we'll see. We'll see how it goes. All right. So it looks like I got through the questions on the VTF. I mean, I'm Josh is asking me if I'm going to wear a fedora. I'm just going to wear whatever the people in the wedding party are supposed to wear. I didn't pick it out. I'll find out. I'll find out in an hour or two. Um, so it looks like I got through that. Looks like I'm through everything on the YouTube. Give me the thumbs up in there. Have a great night, everybody. See you tomorrow. I turned off the VTF, but I didn't turn off the YouTube yet. The last afternoon meeting that I'll be doing before my trip is on Thursday, but I'm trying to set things up for Josh Leffler and Patrick Haw to do all of the afternoon meetings when I'm gone. Thanks, Michael.